Welcome back, friends. We got a bunch to go over today, so we're going to get into it pretty quick. Today, we got Bitcoin, we got EGLD, and we got PEPE. PEPE, the meme coin. This is going to be a fun one. It's going to be our first meme coin, and the chart's actually looking pretty interesting. So let's see what happens with this. It'll be pretty cool. Make sure you enter the Herotag giveaway, all right? The giveaway is in 2 days. There's going to be 2 winners. The first winner is going to be a follower. So anyone who's a follower on Twitter can win this one. You have to follow the rules, obviously. So read the rules on my tweet and make sure you enter. Right now, there aren't a ton of entrants, so your chances are pretty good. But your chances are even better if you're a subscriber on Twitter. There's only like 11 subscribers right now, and 1 subscriber is going to win also. So we're going to have 1 follower win and a subscriber win. Make sure you get in on it. The drawing is on Friday, May the 5th. All right. Let's just go ahead and dive into the TA because even I'm really curious to look at the charts right now. Let's see what's going on. Let's kick it off with our friend Bitcoin. So the first thing I really want you to look at is the weekly chart. On the weekly chart, you can see the golden pocket here in the center. In long-term cycle trends, the golden pocket tends to be an area where you see trend reversals. Once you see yourself dropping below the golden pocket, you're kind of confirmed that you're in the depths of a bear market. So you can see here, anything above this golden pocket, that was our bull market, right? As soon as we fell below, that's when we were really cemented in our bear market. I mean, nobody really knew for sure when we were at around 44, 45 if we're in the bear market. But once we hit and went below that golden pocket, bear market. Now we are essentially building support in the golden pocket, and it looks to me like we might be ready to break it pretty soon. Now, it's not a guarantee yet because we still have our weekly 20 exponential moving average sitting at 25.3K. So I still feel that seeing a move come down like this, just to touch this blue moving average, is likely. It could happen. So 25K is not out of the picture just yet. So we don't want to get too bullish, but we want to keep in mind that we are putting in some really, really good time here with the golden pocket. On a long-term time frame, these regression lines are showing us our channels. During our downtrend, we essentially hit resistance on one channel, and then we hit support on a channel until we fell through, and we kept using these channels as support and resistance levels. The majority of trading went in between the channels, right? When we came in and we had our pump up, like back in January of 2023, so just a few months ago, right? 5 months ago, we had our first big pump. When we hit the 16K level, we kind of bottomed. We jumped up. Well, where did we hit resistance? Right on this regression channel. We actually traded in that area between 22 and 24K for quite a while, from January all the way through March. Then in March, we jumped up again, and what do you know? We once again hit the regression channel. So we went all the way to the right, touched this regression channel, then we jumped up and got resistance on the top regression channel. Now we are moving our way to the right, and we are getting very close to hitting our regression channel again. And if it's anything like before, well, we're going to be hitting that regression channel sometime around May 15th, mid this month. And if we have a move up, like a massive move up, well, then I'm really looking at this level here. This is a key level for 2 reasons. One, it's our next Fibonacci retracement level, 36.6K. And at the same time, it's exactly where we happen to have our regression line. They literally intersect here. I think it's very, very likely if we have a pump up, that's what we are looking for our next big target. Somewhere around this area here, closer to the 36.6K mark is where we may top out and then start coming back down sideways. Remember, this is the weekly. So this is a few weeks out if it's going to happen, and markets have to be pretty bullish. Otherwise, if we go on the downside, I'm looking right here at around 25.3K as being the area that we need to hold support. If we don't hold support there, well, then look to us coming back to this 22.6K level. Now, we're going to switch over to the 4-hour chart, all right? You've seen everything on the longer time frame. Let's take a look at it on a shorter time frame. That A, we are staying above the 45 level on the RSI, okay? That is pretty key. It's right here, right? You can see that on the RSI. We are staying above that blue 45K level line. Now, that's pretty important because a 45K level, when you're above it, you're bullish. And we have been maintaining a good pace above it. We dropped below it very briefly and came back up. And now that's telling me we could be ready for another move to the upside, going back to that 30K at a bare minimum and retesting it, right? We tested it once, we may test it again. One thing that's crucial here are the moving averages. We see the moving averages during a big move up, they get very spread apart. right? They're banded out. Now, what we're seeing is price is getting constricted, and those moving averages, they are getting very constricted in this price range. They're literally all between 28.3K and 28.7K, right? That's a $400 difference, right? They are insanely constricted right now on the 4-hour chart. When moving averages get that constricted, you tend to have a big move coming. We're probably looking at volume coming in and pushing the price up. So I did my DCA buys yesterday. I got them in and I put that in my subscriber tweets. So my subscribers already knew that I made my buys yesterday just so I was good to go. So anyways, that's what I'm seeing here. I'm expecting a move. Now, when we zoom out a little bit and we look at the actual pattern, well, first of all, we do see that there's all that trading in the golden pocket. Really good. I told you that back in March that we wanted to put in a lot of volume in the golden pocket, and we've been doing that. Solid volume in the golden pocket. Dude, I'm happy about that. But when I look at this, what do I see pattern-wise? Well, I see the traditional symmetrical triangle. That's what we're really doing. Price is getting constricted in this triangle, which tells me if it continues this way, well, our breakout's going to happen pretty soon. Usually it happens at around, 70% of the apex. And for the most part, that's going to be right around this area here, which puts it somewhere at around May 6th through May 10th, right? Somewhere in the next 6 days or so, 6-7 days, we probably break out of here. I'm going to continue watching this. I personally think that we could have a breakout sooner, just looking at the MACD also starting to flip. So that's a possibility as well. But right now, this is really the main pattern I'm following. It's just a traditional symmetrical triangle. If we go to the upside, I told you where I'm looking at. I'm looking at around 36K to be our top area if we have a massive pump. Obviously, the 33 to 35 levels, like those even numbers are all going to hold some form of resistance. But 36.6K is really where I would expect us to top out if we have a massive pump up. When we go back here, I look at this main support level as being where we had the majority of trading volume and we have the majority of volume profile that's sitting there to support us. That's right at around the 23K level with a bottom target of about 22.6K. So it's a pretty big dump if we dump, but right now, nothing is suggesting it. Right now, what I'm seeing is more potential within 6 days that we pump to the upside. That's what I'm looking at for Bitcoin. Let's move on and take a look at EGLD. So here we are with EGLD, and EGLD unfortunately is still chilling in its daily descending channel. Now the thing about this descending channel is that we've been in it for quite a while. This has been a fairly long-term descending channel. We're talking all the way since June of 2022. We're only a couple of months away from this being a year-long descending channel. Now, if we break out of this descending channel, I think it'll be monstrous. You can see the Bollinger Bands haven't quite gotten completely constricted yet as much as they could be, like you saw right here. So we do still have some sideways trading time where we could see over the next 6 to 10 days that we continue to get more constricted at this level. I would like to see no lower than $37 at the bottom of this band. Now, the problem is DeFi in general has not been having a ton of volume. So until we see that happen, I still can't guarantee that a ton of volume is just going to come in here for no reason. Markets are still very risk off. So you tend to see more risk prone assets like most DeFi assets, including EGLD, not performing as well as others. But I'll tell you this much, it's been great accumulation season for me. I've been accumulating in pretty much all these bottoms that we've hit. So right now, I still have orders sitting at around $35, which last week was right at the bottom of our descending channel bottom here. But now it's kind of down to around 33. So 33 now is kind of likely if we have a significant drop. Now, if I really wanted to, hope for the best in terms of accumulation, the best would be a larger market dump with everything. Bitcoin, Ethereum, everything takes a dump. Well, then I'm looking at EGLD coming down to around this level, and that level is right at around $27. So we'd have to see a move like that. It would put RSI into the oversold territory. It would match up with where we saw bottoms before, and it would keep this current trend exactly the way it is. So I'm looking at those levels for accumulation. If I want to accumulate, that's where I'm doing it. But for right now, I still have my buy order set at 35. I haven't gone any lower because I'm still seeing a good amount of strength here. The only thing I don't like to see is that we are falling below this $43, $44 level. That's really the level that we want to stay above. You see here for this long-term time frame, like if I zoom out a little bit, what we're really doing is we're looking at all the volume now in this visible time frame. So on the right-hand side, when you see the volume here on the right, that is called the VPVR. That is your volume profile for the visible range. This that we're looking at now is the visible range. It's from June 2022 all the way until May 2023. That's our visible range, and this is the volume profile during that visible range. So what does that mean? Well, it means that the majority of our volume for this entire range sits right at that $43 level. That's really the key level that we want to get above, right? We want to get above that and get support there because that's where the majority of our volume has been. That's where we should have the most support. So at this shorter time frame, I'm seeing a couple of good things and a couple of bad things. The bad thing, obviously, is that we fell below this 20 exponential moving average. What we really wanted to see after this big pump up with the Korea exchange listing and with consensus and everything going on with Romania doing their own NFTs. So we saw all of that stuff lead to a pretty massive pump. We saw huge buy candles coming in, and then we saw quite a lot of sell volume after that too. So we did have people taking profits. Now, at the end of the day, what would have been great is to see us get support on the 20 exponential moving average. We unfortunately fell below it. That is not like the greatest sign, right? Because we basically had diminishing volume on the way down. You expect to see that when people are selling off and then the asset's correcting. So we had a correction. That's literally what happened. The thing that I don't like, though, is that the RSI has fallen below the 45 level on the 4-hour chart. I want to see the RSI go back above the 45 level. Until it does, I'm going to say that, hey, my $35 order is going to sit. That's going to be chilling right around here. I want to be at that 35 level to pick up some more EGLD. And then if I can set some lower orders, I probably will. I'm fairly sure that DeFi is going to do very well once we do have the next retail boom and people coming into markets and games and NFTs, metaverse, all these things taking off again. It's going to happen, right? Cyclical natures definitely occur in markets, and I think they're going to happen in this one because this is a market that was just born. This is our MACD. So on the 4-hour chart, what you can see on the MACD is that we had this downtrend after that big pump, and now what's happening is we're starting to have a pattern like this, right? The volume on the MACD is starting to flip. We're starting to see the MACD come into this range where it might be turning. And if the MACD turns, well, then this blue moving average is going to flip the orange, and that's going to put us in a bullish cross. So you see when you have the blue here flip past the orange, this was a bullish cross. Man, I can't draw. So right there, that was a bullish cross. And what did you see? You saw the MACD went up. Now, if we zoom out, at that point, what did it correlate with? Well, it just so happened that this cross correlated with the massive pump up. Well, now what's happened is we're starting to see that again. We're starting to see potential of those two averages starting to connect with one another. And if the blue crosses and we have another bullish cross, well, I think we're going to be looking at EGLD taking another pump up. But what I really want to see, I mean, I don't really care about much else, to be honest with you. This is what I really want to see with EGLD. The most important thing to me, I want us to break out of this descending channel. That is really the most bullish thing to look for. Once we break out of here, I want to see support at the 45 level. The top yellow line here needs to turn into support, meaning we need to move like this, and then we need to come down and bounce off of it and start that uptrend. That's when you'll see this downtrend turn into that uptrend. That's really the key, right? That's what I want. When I see that, I'll probably start supremely accelerating the amount that I'm allocating, right? Because I just don't have confirmation yet. If there's a chance that I could buy it lower, I'm going to go for that. So I try to play my risk and reward to give me the best cost basis in the long term. But if I see confirmation that we're moving above that, I'll probably be increasing my DCA buys. Not just yet, though. Right now, I'm still going for value buys. So that's kind of really the key. That's what I want to look at. And as we get closer to this red moving average, the 200 exponential coming down and getting constricted too, I think we get closer and closer and closer to breaking above it. Really, that's the key. You want to break above the red moving average on the daily, and you want to break above the yellow descending channel top. All right. Those are the keys. That's all you're looking at with EGLD. There's nothing else you really need to focus on if you're looking strictly statistical pattern analysis. This is the biggest pattern we're looking at. We'll come back and check out EGLD again very soon. But now let's switch over to PEPE. Time to see what's up with PEPE. PEPE. So with PEPE, the first thing that we're going to go over is the fact that PEPE has basically outperformed everything in its first week here. It's pretty unbelievable, but this is what meme coins do, and I'm starting to kind of just go with the flow with it and just enjoy the meme coins and try to make some gains from them instead of just being like, what are people doing? You know, people are just gambling and people are hoping for the best. So you know what? Why not? I can do that a little bit too. I put some money into PEPE just to gamble, just to see what happens. It's been a stressful market. Might as well enjoy it a little bit and have some fun. So what we see here is that PEPE really went active on, I'm looking at MEXC Global on the chart, and we're looking at it going active on MEXC on April the 19th, and it pretty much just went sideways for about a week or so until April the 27th, and then just took off. I mean, the amount of appreciation this thing saw between then and now is crazy. It's up 337% since then. I think it actually started earlier than that and continued going. Anyways, if we're taking a look at where it is now, it's ironically looking pretty good on the chart. So when you look at it on the chart, the first thing that you want to look at here is, well, what are we seeing as far as performance goes? Well, we see on the hourly that it's been riding the 20 exponential moving average. We know that's a bullish sign. When it dropped below the 20 exponential moving average, it got support here on the orange. And you can see here, the orange moving average is the 50. So we got support on the 50 exponential moving average. We then dropped below the 50 and we got support on the 100 exponential moving average. And now we've jumped back above the 50 and the 20 exponential moving average. Now, the reason that this is bullish is because usually if you're just going to go down and nobody else is going to be buying the token and it's just going to crash, what you're going to see is you're just going to see everything fizzle out there, right? You have declining volume here, but we haven't fizzled out yet on this, which is kind of surprising. It means that the meme power still exists, right? People are looking for a repeat of Doge, of Shiba, and they want to be in on it for the next one. And what they're seeing now is maybe the potential in something like PEPE. So there are a lot of people who just don't want to miss out. They're buying a little bit and hanging on. That's why I bought some. I'm just like, you know what? If this thing becomes like one of the top 10 coins by the time the next bull market begins, well, I can put in a little bit of money and reap some benefits out of it, right? It's going to end up getting me a lot more Bitcoin if I can sell whatever I've put in for triple, quadruple at some point. And if I lose it all, so what? I lose it all, I gambled. So that's kind of how I looked at it. Now, I'm not recommending buying this or anything like that. Like, meme coins are a gamble. If you go in, anything you put into this, you should be ready to lose, ready for it to go to zero. So basically, now that I've put this in here, I'm watching the charts a little bit more, and the chart's looking fairly bullish. Like, what do you see here pattern-wise? Right? You see that it's riding the 20 exponential. It's gotten support on its moving averages. It didn't go back on the hourly and touch the 200. Instead, it's gone back above the 20. And if it bounces from here, well, we could be looking at it hitting the point. I'm just going to say 0.17 instead of 0.00000017. So looking like it could hit 0.17. And basically, if I look at the trends now, this is the funny thing, we see a symmetrical triangle. So assume that we trade in this symmetrical triangle, right? Assume we trade here. Well, what does that mean? That means that on the hourly, we're looking at a move up sometime tomorrow night. So, I mean, at least I can wait around until then and see what's going on, take another look tomorrow, and just kind of enjoy watching something new for a while. Who knows, man? I mean, this thing could just go to the end of this apex and just dump. Like, there's no way to know. But at the end of the day, I don't mind watching it. It's kind of fun. Now, the other thing is we got to look at this at the 4 hour, right? We're only going to look at 2 time frames since it's so fresh. When we look at it at the 4 hour, you can see that the trend kind of holds. You can also see on the 4 hour, the drop actually went right around the 20 exponential and we got support on it. So any other asset, dude, like any other asset, and I'm going to be like, this chart looks bullish. Because also, look at your RSI. The RSI is chilling at around 56. It got support right at around 48, 49, like right around where I'd put that 45 key RSI level. It got support there. The MACD, all the way at the bottom, looks like it's starting to flip bullish again. Like, what is going on? Why is this chart looking so good? I don't know. I mean, at the end of the day, I'm not putting any more money into it because I'm ready for it to just dump and go to zero and lose all my money. That's what I assume is going to happen when I buy a meme coin. So that's why I don't buy them. But now I'm at the very least, I'm going to have fun watching it. And if you are watching it, if you're interested in more TA to see how this thing's looking, let me know. Make sure that you subscribe on Twitter, support the channel. That's the only thing that keeps me making videos, because otherwise I make nothing from anything that I do. I do everything pretty much for free. So make sure you subscribe if you want to support me. And at the end of the day, you will see more content. You'll see when I'm doing my DCA buys, you'll see all that kind of stuff. So subscribe, and you are a subscriber. Thank you for subscribing. If you saw this on YouTube, make sure you subscribe on Twitter. You'll see everything there in real time. I am going to be traveling from May the 10th to about the end of the month. Like, I'll be back and forth from home. I'll still be active on my phone. I'll be checking prices. I'll try to write threads whenever I can, and I'll try to give a lot of content to subscribers that way. So make sure you sub, make sure you support. Thank you for watching, and good luck. Peace out.